It's the end of the day with Ray. Hello, my friends. Well, if you look on the Sharp Interactive board, you'll see the EFI logo. I got a couple of legs sticking out of that logo and a couple of hands. Yes, ladies and gentlemen, EFI gave the boot to Fiery. And back in January of 2022, they gave the boot to their software. And, you know, I think what they want to hang on to is the correct thing to hang on to. Their industrial inkjet technologies. EFI has a great vision around inkjet technologies in the manufacturing space, printing on ceramic tiles and packaging. And folks, their products are pretty phenomenal. And I've been talking for a while now about how inkjet technology is going to change the world. But it has nothing to do with business print. It has nothing to do with production business print. It has to do with inkjet technology, printing on things that were just unimaginable a few short years ago. So congratulations, EFI, for building out some fantastic equipment. And I'm going to study this a little bit more because I'm kind of excited about what you're doing in the marketplace around industrial inkjet. But ladies and gentlemen, the story that EFI is telling everybody is a story we need to pay attention to because we're going to see some consolidation in the space. The ancillary softwares that are out there for the print channel, they're going to consolidate. I think about my friends with these DCA tools. My God, we got a DCA tool for every dealer in the whole country to have their own. Okay, that's a little bit of an exaggeration. But you get the drift. There's way too many of them. And of course, end users, they really don't care about getting pie charts and all this crazy stuff around managing print. The ones that do, well, there's not enough of them to have a viable product, let alone 97 different ones. So we're going to see some consolidation in the ancillary products. And folks, consolidation to me is, I think of it this way, aligns past aspirations with what current realities determine the future needs. And I talked a little bit about this in yesterday's Xerox episode. You know, organizations have to look at their product, their software, even their service. And they have to determine, is that going to be needed like it's needed today in the future? Because in our industry, those friends of mine that sell supply and service print equipment, we know what we were doing way in the past, back in the 90s, is totally irrelevant to what the future is going to need. Even though some of us are trying to drag that past to the future instead of delivering the future to the present. But at the end of the day, we have to determine this. Businesses always have to determine this. How do we maintain a continuous relevance? Do we have to completely reinvent ourselves? Do we have to liquidate some of our assets and focus on our other assets that have more longevity in the future as we see what's going on with EFI? And folks, because, you know, EFI, they want to print whiskey boxes. This is a great picture, right? They got some fantastic equipment. I believe EFI wants to be the OEM for the OEMs in industrial ink. It'll be interesting to see how they might align with some of the other OEMs in the space. Because industrial ink definitely has a pretty foreseeable future of growth. Production print is not a growth business. And I'll argue about this all day long. Production business print is a displacement growth. These analysts out there telling you all to get into production print is just nuttiness. There's not enough of a marketplace, and the marketplace is completely oversaturated as the OEMs desperately try to get into the production space even more and more and more. Kind of nutty, right? It is kind of nutty. I believe that the production print space around documents is really putting a lot of pressure on the OEMs' financials. And I believe the OEMs are really going to have to start thinking about what they do in that space. And I know some of the OEMs are going to brag, well, that's where we make all our money is in production print. The problem is you don't make enough money in production print, and it's not a big enough market, especially with 1 million players chasing the same customer in a declining marketplace. Industrial ink print, though, whole different game, whole different world. So congratulations, EFI. I think you made the right decision. But I wanted to go back in time a little bit and kind of look at EFI and Fiery and their software business and kind of get my head around that. Because, you know, when these things are owned by private equity, you don't have any idea what their revenues are, right? Or if they're making any money. I mean, private equity has a way to financial engineer things that, you know, publicly traded companies really don't. They have to expose most of it, right? And so I went back, I found this article that was published in November of 2013, and it was published by Market Screener. And, you know, EFI had some big aspirations. You know, so we're going into the 2014 year, which 9 years ago, right? And they were talking about how they wanted to hit $1 billion in revenue by 2016. They were talking about their industrial ink, equipment, and they were excited about it. They were talking about some deals that were pending. They were excited about it. I believe it was around this time frame that EFI's mindset changed. I believe EFI started thinking of themselves as an industrial inkjet company, not a company that has software to help print dealers. I really believe this is when they changed their thinking, and they started to figure out, how do we chase the revenue in the industrial inkjet space? And so, folks, I wanted to look at some of their numbers, and you could only find it when they were publicly traded, and I got this out of CSI Market. But back in 2016, they hit $725 million, so not quite the billion they wanted. They did hit the billion in 2017. So that was a pivotal year for them in 2017. $1 billion in revenue. They did it again in 2018. $1 billion, just a little bit above where they were in 2017. So they're on the right path, right? And then in 2019, they sold the company off to Cyrus Private Equity, but they have the numbers through their first quarter of March, and they were at $223 million. So odds are in 2019 they probably did the $1 billion. But what did they do in 2020? 2020 was a tough year. I don't think in 2020 there was a whole lot of fiery going out, right? I don't think in 2020 we were seeing a whole lot of software going out. And so what happened in 2021? What happened in 2022? Well, in 2022, EFI sold off all their software to STG, Symphony Technology Group, private equity firm. They kind of booted it out, and at the end of the day, that was probably the right decision. But what we don't know what the revenue was for their software business, and we don't know what the revenue was for Fiery. We don't know what the revenue was for their inkjet technology and how that grew. Was that where they got most of their growth? I believe it is. If you go back to that article, it was written in November of 2013. Well, they had some big aspirations. They were getting orders in place, and that $200 million to get them over the billion probably came out of that inkjet business. But how much more came out of that inkjet business? It would be so nice to know those numbers. And now they spun off Fiery. And folks, they do talk about they did this so they could give Fiery some autonomy and Fiery could focus on what they focus on. At the end of the day, I don't know how they have autonomy, because Jeff Jacobson, has major leadership roles, let's just call it that, right? In both Fiery, in both EFI, and he's also executive partner of the private equity firm Cyrus that bought EFI and now owns Fiery. And so, there he is. And folks, I think that, Jeff and the team, they're making the right decision. They really are. I think there's a huge growth potential and opportunities galore in industrial ink. Again, nothing to do with documents. But folks, I got to ask a question regarding the spinoff, because, you don't know any of this stuff. But we know that private equity, they can financial engineer things to the benefit of the private equity, not necessarily the benefit of the company, the software, whatever's going out, right? So I got to ask the question, and, was that a pretty clean deal, getting Fiery, booting them out? Did Fiery get saddled with some debt? A lot of times private equity likes to saddle them up with some debt. And then what's the exit strategy for Fiery? I'm thinking maybe Ricoh buys them. They bought DocuWare. I did an episode not too long ago, and I said, well, maybe they ought to buy PaperCut. The bottom line, folks, is there has to be a consolidation of all this stuff. And we know that Fiery was really built for laser color production. And, as these industrial inkjet machines are manufactured by EFI and others, well, they really need Fiery to play in that space. So what is the exit strategy? What was the deal when they spun them off? It'd be kind of neat to know that. But it would also be neat to know the numbers. It would be neat to know what the EFI numbers are on the industrial ink equipment, because that's all they got left now. What does that thing look like? Are they doing $300 million and all the other revenue went to the software and the Fiery? Was most of the revenue around the industrial ink? It'd be really cool to know that so we can help prepare ourselves. Because, ladies and gentlemen, we got to prepare ourselves. You all remember Kofax, right? What did they do? They bought up all these ancillary softwares. They were owned by Tomo Bravo, right? And then I remember doing an episode last year because Tomo Bravo was saying they were going to sell that off for $3 billion was the asking price, right? And I think they got a little over half of that $3 billion. So at the end of the day, we're going to see some major changes in our space. And everybody watching me knows this. Status quo is the killer of all that'll be invented. Don't get stuck in status quo, and I'll see y'all tomorrow.